This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on July the 13th, 2017. Our time is 8:40 Mountain. Radio show runs 6:30 CHED in Edmonton, Sunday afternoon at 3. If you ever miss a show, they're archived on Harold's website, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. Connect with Harold, 1-800-432-1022, 1-800-432-1022. The website, rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Featured Diamond of the Week is a .41 carat, round, brilliant cut, fancy purplish pink argyle. We'll talk about diamonds coming up in the second half of the show. Well, as expected, the Bank of Canada raised rates for the first time in 7 years. Canada became the first Group of 7 country to join the United States in raising rates on Wednesday, fueling speculation the world central bankers are heading into a tightening cycle. The central bank's benchmark was raised to 0.75% from 0.5%. It said future rate moves will be guided by the data, while downplaying recent sluggishness in inflation. Investors are looking at the decision as a possible harbinger of things to come globally and are monitoring it for clues on the central bank's resolve for withdrawing stimulus. With the prospect of central bank tightening, it has triggered a sell-off in government bonds over the last couple of weeks. But Harold, this has been a very confusing process. It wasn't too long ago, maybe 3 weeks to a month ago, they were very concerned, the Bank of Canada, about the housing market, Canadians' indebtedness, even the job market. There were some questions surrounding that. The oil market was a concern as well. And then all of a sudden, out of the blue here, in a very short period of time, they went from dovish to hawkish. And it seems very strange. I know there were people that were critiquing their communication to Canadians. How do you switch the flip the switch that soon from being very dovish to hawkish and thinking that things were bad to everything being so rosy and sunny? People were saying, well, maybe we're in a situation where they were trying to keep the Canadian dollar down. And with the United States raising rates, it's given them a little bit of a wiggle room to boost our rates up. Of course, it was back in 2015. They cut, we were at 1% in Canada. They cut it by 0.5% over a couple of cuts. And that's where we sat for about 2 years. And now we're working our way back to 1%. But it was an interesting week in the fact that they did go ahead and raise rates. They have changed their tune dramatically, and yet at the same time, Harold, if you look at things logically, they're not getting any better in the housing market in Toronto. It's rolling over. Toronto is rolling over without a doubt. Vancouver is a concern. Oil market a concern, and we live off our natural resources here in Canada. And then a lot of the jobs that are being created are part-time jobs. So we'll have to wait and see where the Bank of Canada goes from here. And even the Federal Reserve in the United States, Janet Yellen, was testifying before Congress. And she talked about more rate raises, but we'll have to wait and see when and if that happens. She talked about it possibly happening over the next couple of years. So these banks, they almost don't seem to really know what they're doing on some level. They're flying by the seat of their pants and not communicating very well, Harold. It's a confusing time.
Better believe it is. I mean, this is one of the dumbest moves I think I've ever seen. And I don't know why the Canadian government did it. It makes no sense at all. If they're concerned about, number one, the real estate market, why does it make sense to raise interest rates that's going to make real estate and mortgages more expensive? That makes zero sense. When the Toronto real estate market dropped 35% in 1 month, that doesn't happen. The real estate market doesn't trade like that. When all of a sudden the real estate market starts trading 30 or 40% in a month, that's a disastrous situation because almost everybody's major net worth is in their home. So why in the world are they playing? You don't want to see your home go up or down 30% in a month. It's normal for real estate to move slightly higher every year by maybe 2 or 3 or 5%. Certainly not 35% in 1 month. So now that they did what they did with Toronto and Vancouver by imposing these tariffs and taxes, they've slowed down the real estate market. It's now plummeting. Now they're going to raise interest rates, which are going to make mortgages much more expensive or more expensive. Why in the world did they do that? That makes no sense. And then, you're right, Randy, we read a report last week where Canadians are more in debt at this particular point than probably any other time in Canadian history. So why does it make sense to raise rates where their debt level is going to be higher because they're going to pay more in interest rates? And then you're right again. Oil prices have dropped down to $44, $45. So how is the Canadian economy getting better? You know, I look at and I trade currencies on a daily basis. About 2 months ago, the relationship between the Canadian and American dollar was that if you wanted to buy or if you went to the United States, it would take 1,380 Canadian to get 1,000 American. Now it's 1,280 Canadian to get 1,000 American. So there's about $100 difference, you know, over the last few months. And again, most of that move came with, again, and we were shocked that they were even talking about raising rates in Canada, because I don't see what benefit that would do. So I don't think that it's going to be a benefit. I do believe it's going to blow up in our faces, and I think at this point here that I doubt that we're going to see too many more interest rate hikes. To raise interest rates at a quarter of a point, I just don't see what the benefit of it is. And I always felt, and I still do, that the Canadian government wants a weak Canadian dollar, which makes our exports that much more appealing. So, again, this move totally baffled me. I don't think it's going to change the market for us in any way, shape, or form. And all it's going to do is hurt Canadians because, you know, raising rates means that you're going to pay more interest. You're going to pay more in mortgages. And it's not going to stimulate the Canadian economy in any way. So again, I'm shaking my head over that one, Randy. It makes absolutely no sense. You know, so during the summer, things are generally slow. The markets are trading in a range. No real new information has come out at this point. Gold's trading right now at about $12.18 to $12.20. As we're taping the show on Thursday, it's basically trading down $2.80, but it's been trading in a range. And the last few weeks, the gold market has backed off a bit. But I still do believe that with all the situations happening in the world today, and the major one, I believe, is with President Trump, that's a loose cannon. That's an area that we really need to pay attention to, because any moves that he's going to make moving forward is going to affect the markets in some way, shape, or form. I'm also believing that even though we haven't heard much about it in the last week or so, there's no doubt that North Korea and the United States are on a collision course, and that is going to affect the markets in some way, shape, or form also. So as we're trading again right now, most of all the markets are trading in a range. We've got the gold market trading in a range at this point here, trading at about $12.18, $12.20. Silver's trading just below the $16 level. Platinum broke 1,000, is trading at $9.09. It's down $11, but we're not doing much on platinum or palladium at this particular point. The oil market at this particular time is trading in the $44 to $45 range, obviously about a third of where it was when it hit 150. But again, there's some things happening in the oil market. Number one, and we always know that OPEC cheats. So when OPEC and non-OPEC members came to an agreement a few months ago, we knew that there was no way in the world that they were going to live up to that. So the fact that they've been overproducing is why oil's been falling. Also, the U.S. came out, you know, with their statements saying that they may not need to import any oil. So the fact is that if they're expecting that much oil to come out of Texas and up in the Dakotas, you know, you're going to talk that Saudi Arabia's biggest customer is leaving, and that's going to affect the oil market, you know, in a downward basis. So again, all the moves and all the hype and everything that we've heard over the last month or so as to Canada raising interest rates, it just absolutely, I'm shaking my head, Randy. It makes no sense to me whatsoever. I think it could turn out to be a disastrous move. And it, again, why in the world would they raise interest rates in Canada when things are not looking like they're going into an inflationary cycle? Because the real reason to raise interest rates outside of the United States is primarily because of inflation. The only inflation that we're seeing at this point is in food. We're not seeing it in oil because oil's all the way down to $44, $45. So again, Randy, I really don't expect a lot to happen from this. I do still feel very strongly that the U.S. dollar is going to be the strongest currency and going to continue to move substantially higher. And that's primarily where I'm keeping my money at this point, is definitely in the U.S. dollar. I don't see any other currency that comes close to the returns that we're going to see in that market.
Canadian dollar today around 78 and 0.37. David Rosenberg from Gluskin Chef coming out and saying, you know, if it gets around 80, he's very concerned. He becomes very bearish. So I still believe the Canadian dollar will be weaker than the U.S. dollar and will weaken over time. Harold is right from an point of view. The Bank of Canada wants a weak Canadian dollar. Find out about investing with Harold Siegel. He has different programs in place where you can be making money today. Connect with him. RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. How do you invest today so you can retire tomorrow? That is the big question. And many of our radio listeners, long-time and short-term listeners, phone Harold on a weekly basis to get his opinion on the markets, get an update from him, and also find out where they should be allocating money at this time. And we believe in hard assets. Speak with Harold about hard assets, gold, diamonds, other programs that Harold has in place. 1-800-432-1022. The website is rarecoloreddiamonds.com. There are a lot of people that are very concerned about the stock market. Ray Dalio is one of them. He's one of the top hedge fund managers in the world. And he called time on the era of the central bank stimulus, saying the global economy is heading towards a new stage where markets won't get the same level of support from monetary policymakers. The directions of policy are reversing, and with central banks showing the flow from their proverbial punch bowls of stimulus, slowing it down, Dalio, chairman of Bridgewater Associates, the world's largest hedge fund, wrote in a July 6 note, "Our responsibility now is to keep dancing, but closer to the exit, and with a sharp eye on the tea leaves." So there you have one of the most successful hedge fund managers in the world. He was included in Tony Robbins' book here recently about money, saying that keep dancing, but keep a close eye on the exit and be ready to jump. Without a doubt, wise advice. Also, there could be trouble ahead for developed world equity markets with frothy valuations. As central banks started shifting policy, according to Deutsche Bank, price-to-earning ratios increased steadily after the global financial crisis as waves of monetary stimulus pulled down the yields on safe assets, spurring investors into riskier options. That dynamic may be on the verge of reversing, with a turnaround in policy now underway in developed nations other than Japan. And according to the chief economist of the Japanese unit of Deutsche Bank, Matsuko, he wrote in a note dated July 10, the average of the standard deviation of stock market capitalization as a percentage of GDP in 7 major developed countries has been approaching the previous peaks of 2000 and 2008. And we know what happened in 2000 and 2008. We saw major pullbacks in the stock market. Crispin Oddie, and he is a money manager out of the UK, who has made money for a second straight month by sticking to being bearish on equities, said the chance of a market crash is rising as growth slows and the Federal Reserve normalizes interest rates. The credit cycle, boosted by loose monetary policy, has peaked, and there's a widespread slowdown in the auto, commodity, industrial, and retail sectors. He wrote in an investment letter to his investors. Unlike previous dips since the financial crisis, central banks are responding by printing, and they're actually not responding by printing more money. This time, they're doing the reverse, which is likely to exacerbate the negative trend. And he put, all this sits very uncomfortably with the fun being felt in the stock markets. When I look at the move up since Trump's election as president, I detect the walk of a drunken man. So he's very concerned about tightening as well. So, Harold, this is something, obviously, a theme that everyone needs to be aware of right now, and that is how much will central banks tighten and over what period of time, and what will that mean for fixed income, obviously, investments versus equity investments. And it's also a consideration when it comes to hard assets as well. When people start to get into chaotic situations, if we see big moves down in the bond market, if we see, and that's something that Jeff Gunlock, bond fund manager, is talking about. He's very concerned about the unwinding of stimulus, the quantitative easing, and what happens to the financial markets when we see a pullback in equities, in bonds, both things that have been doing quite well. You really could see a move into hard assets in a major way, gold and other hard assets like diamonds. And Harold, that's something that would not surprise me in the slightest.
Not me either, Randy, because again, with interest rates as low as they are, you can't make any return on investment. So that part of the game plan is gone. You know, back in the day when you were making 10% on your money, you could project, you know, how you could live in your retirement years and how much, you know, you needed in order to retire. But that's totally different now because, again, we're not at 10% interest rates. We're at almost 0% interest rates. Even at 0.75% in Canada, just figure how much money you're going to need in order to be able to pay your bills or to live just off the interest when you can no longer work. So, again, that's ridiculous to think that with interest rates as low as they are, that anybody is going to be able to retire to any comfort level unless you've amassed a fortune of money and don't need to live off the interest. You're just going to spend your money, you know, for your remaining days type of thing. And that's a frightening situation because how do you ever calculate how much money you need if you're going to live into your 90s, which many people do today? So that's a frightening situation. The other thing is, as you just mentioned, the unwinding of certain financial vehicles like derivatives and somehow paying back all of the stimulus and the quantitative easing, you know, that happened in 2008, 9, and 10. That's uncharted territory. So we know what happened when Lehman, for example, and Bear Stearns tried to liquidate and get out of some of their derivatives and things like that. They're no longer here anymore. And those were two of the largest brokerage firms on earth. So, again, this is all uncharted territory. A lot of the things that are happening right now, they're winging it. I think that most countries right now are in dire straits. They're not making money. Their economies are lethargic, and they're trying to do whatever they can do to jumpstart it. But again, that's a very difficult situation because you've got massive unemployment or people being underpaid. You know, in Canada and in the United States, the increase in jobs is part-time. That's not a good situation, and the reason that they're doing that in the U.S. especially is because primarily of Obamacare. Obamacare has put the emphasis on and the onus on the corporations to pay for health care for all of their employees. And the loophole is that it's only for full-time employees. That's the reason why in the United States most of the new jobs created are all part-time. That is not a good situation because people are not making enough money to survive, and they're not going to make any money return on their investments if they're in standard investments. So the outlook is not very bright. In actual fact, it's very stressful for most people because they can't pay their bills or they can't see the forest for the trees because, again, interest rates are low and most people believe that they'll never, ever be able to retire. So we're going to have to see what happens as they start to unwind some of these derivatives and start to pay back the money that was, done by quantitative easing. I think that you're going to find that the banks are in terrible shape now, not in good shape, because, again, who are they loaning money to? And the interest rates are so low, how much money are they actually making? So I think at this point here that we're going to head into a period of time of almost stagnation where people just don't know what to do. I've been in the alternative asset business for many, many years. I've been in it for 35 years. I've traded the commodity markets and had the largest commodity brokerage firm in the country that I built from nothing. So I like to think that I know these markets, and we've identified major trends over the last 17, 18 years that have made some of our clients absolute fortunes in the market. The fact is that we've always thought outside of the box. We don't do the same as everybody else does. We deal in alternative assets. We're not in stocks. We're not in bonds. We're not in paper. We are realistic about what's happening in the market, and we've been able to identify trends. That's why we have private investment programs that our clients invest in that return over 25% a year. Now, I know that sounds ridiculous. Nobody's making more than making 25% return, but our clients are. It's a program that we've devised many, many years ago that many of our clients have retired off of. So, again, if you're concerned about your present investments, you're not doing well, you can't see yourself retiring or making returns from your present investments, just pick up the phone and give me a call. Let me explain to you what we're doing, and if it makes sense to you, I think that you're going to find that your financial future will be much brighter than it is at this particular point. We have private investments that our clients have invested in for many years. In fact, some of the businesses that we've brought forward have been in operation for 3 or 4 generations now. All I did was modernized it and included my clients, which really increased the business that we've done substantially in a much shorter period of time. So everybody is benefiting from it. And again, many of our clients are making over 25% a year and getting paid monthly on that, which means that at least they can see the forest for the trees. They can meet their expenses, and they can plan for the future. So, again, if that's of interest to you, we do have private investment programs that are returning over 25% a year. So, excited about it. This last program's been going on for almost 5 years now, and our clients are doing unbelievably well with them, and it's something that we anticipate will go on for many generations.
Connect with Harold. Find out more. 1-800-432-1022. Call is free. Obviously, anything discussed confidential. You can speak with Harold. Connect with him through rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. Our featured diamond of the week is a .41 carat, round, brilliant cut, fancy purplish pink argyle. See it at rarecoloreddiamonds.com. Featured Diamond of the Week. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on July 13th, 2017. Our time is 9:05 Mountain. Radio show runs 6:30 CHED in Edmonton. If you miss a show, they're all archived on Harold's website, rarecoloreddiamonds.com. Go there, rarecoloreddiamonds.com. Podcasting as well. We're portable. We go on any of your devices. Go to iTunes, type in The World Financial Report on Radio. You can podcast through Harold's website as well, rarecoloreddiamonds.com. Featured Diamond of the Week, and we have just a beautiful, beautiful diamond for you to take a look at. It's a .41 carat, round, brilliant cut, fancy purplish pink argyle. Beautiful diamond. Featured Diamond of the Week from rarecoloreddiamonds.com. As well, in our free weekly newsletter, and we encourage you to get our free weekly newsletter. It's the companion to the radio show, and we send it out via email free of charge. You can go through it in 5 minutes and be completely up to date as to what's happening in the world financially, geopolitically. It's more than worth getting. It's free information that you can review very, very quickly. We know you're busy, but we want to educate you. You work hard for your money, so you need to make educated decisions, and you can get our free weekly newsletter from Harold, 1-800-432-1022, the website rarecoloreddiamonds.com. And Harold, we have an auction underway right now from H. Siegel Fine Auctions, hsfineauctions.com, the world's premier online auction site for luxury cars, rare diamonds, and fine collectibles. That auction is ongoing. We are getting bids coming in, and you can go and sign up and register, see the online catalog, and take a look at some of the items you can bid on. And one of them is Elizabeth Taylor's amethyst, pearl, and diamond brooch. Now, the estimated value on this is $150,000 US. And this brooch is a museum piece. It has an amazing backstory, obviously belonging to Elizabeth Taylor. But what a beautiful, beautiful piece that is, Harold. And we expect that that auction item definitely, without a doubt, will go.
You better believe it, Randy. I'm very proud of what we produced. And I want to send kudos out to Relentless Technologies in Vancouver that has built all of our websites over the years and have just done a phenomenal job. So we have two auction sites now. One is a live auction that normally takes about an hour, and we haven't had one of those in about a year, but because we're building an additional auction site, and this is the first week that we are easing back into the auction business with our new website. So where other auctions were for approximately an hour, they were live, and the bidding was live, and it worked out tremendously well. We did phenomenal with them. We anticipate continuing to do them. On top of that, we did some work with some amazing charities. They loved using our auction platform, so it worked out extremely well. However, we wanted to produce another auction that was a longer-term auction, along the lines of an eBay auction, but much more sophisticated, and that's what we built. It took about a year to build this site. It turned out spectacular. I'm very proud of it. Spent a lot of money on it. Now we're starting to advertise it. So we started with 10 auction items, and this auction will be ongoing. It will continue to go, and we can continue this, for as long as we want to do this. So, for example, there are certain pieces on the auction that are only up for a few days. Like, for example, the Libertad coin. All those that are interested in bidding on this amazing kilo silver coin, the starting price on it is $1,000. We value it at around $2,000. We've had several bids on it already. However, there's only 1 day, 3 hours, 51 minutes, and 3 seconds left on the bidding. So if that's something that you would like to own, you got to get started on that right away. There's only 1 day left on that. Whereas if you look at the Elizabeth Taylor piece, that Elizabeth Taylor piece will be up for approximately a month. Also, what's different about this particular website is that you can listen to a actual description of every single piece that we're auctioning. So when you pull up the piece that you're interested in, there's a bar that says audio description, and when you click onto that, that will give the history of the piece. So again, this is a new concept for us. We anticipate, that we'll have the odd bug for the first auction or so, but we're working those out. So far, everything has gone extremely well. Very, very excited about it, and we're attracting people from all over the world now. So we've advertised it very heavily. We will continue to do so. The main reason for the auction site is to eventually sell our clients' diamonds, and that's why we built these sites. But we also wanted to bring to you some pieces that were just phenomenal. And the first one is this Elizabeth Taylor piece that Randy just described to you, is Elizabeth Taylor's amethyst, pearl, and diamond brooch. Now, when we put a value of this particular piece, when we look at the piece and say it's worth estimated value $150,000, starting bid price is $55,000. The fact is, in 2011, a couple of Elizabeth Taylor's lesser expensive pieces came up for auction. They were more affordable. We've seen some of her amazing rings, and I own the last 8 pieces of her estate, and some of them are in the multi millions of dollars. However, what was very interesting in 2011 was that some of Elizabeth Taylor's lesser expensive pieces came up for sale. And the estimates, for example, were around the $80,000 level on these earrings and a necklace. There was 3 pieces. Each one were in the $50,000 to $60,000 range as far as an estimate goes, and they sold for $800,000 to $900,000. Anything that Elizabeth Taylor owned is worth a fortune. And this particular piece not only is authenticated, but on top of that, we have a picture of Elizabeth Taylor wearing the brooch, which is included in the sale. And sometimes the provenance of these pieces are worth a fortune. On one of her other pieces that we have, Elizabeth Taylor designed her daisy yellow and white diamond necklace and earrings, which I own. And just the artwork that she sketched on a scrap piece of paper and that she actually signed her name on is worth over $250,000. So, again, it's a phenomenal piece. It'll be up for about a month. Starting price is $55,000. It's a steal anywhere near that price, and this will only go up in value as her pieces have sold for more than almost any other movie star's pieces have ever sold for. Elizabeth Taylor, her gems have just sold for fortunes. Then there's a 34-point oval, fancy, vivid, purplish pink argyle. One of the most beautiful diamonds. The starting bid price is $60,000. It's a diamond that's worth at least $140,000. That's up for sale. As I mentioned before, the 2007 series Libertad Kilo silver coin, that's up for sale, but there's only 1 day left on that. So, again, I'm hoping that people are going to listen to the podcast and bid on that because it's one of the most beautiful coins that you'll ever own. I have it displayed in the living room of my home. It's so beautiful, and I know of all the coins that we've ever offered, this has been Randy's favorite coin, the Libertad. It's amazing. Even the way that it's boxed is special. It's just a very special piece. We've also put up a 1.31 carat hard-cut fancy yellow diamond necklace. That starting price is only at $10,000. Estimated value is over $15,000. Just absolutely gorgeous heart-shaped yellow diamond necklace. There's another argyle piece. It's over 1/2 carat. It's a 53-point princess-cut fancy pink argyle. It is absolutely spectacular. Then, probably one of the top items for sure is this 209 emerald cut fancy, vivid yellow, internally flawless diamonds. When you look at the video and the picture of this diamond, you're just not going to believe it. It's the most beautiful yellow diamond you'll ever see. It's valued at $400,000, but the starting bid price is $200,000, and it's worth every penny that you could pay for this diamond. It is one of the most beautiful, if not the most beautiful, yellow diamond I've ever seen. Then we've got the Mexico 2011 Aztec calendar. It's also a kilo silver coin. I invested heavily in these silver kilo coins, and they have not disappointed. They are so beautiful. And this is the Aztec calendar. It weighs 2.2 pounds, or just over 35 ounces. It's magnificent. Starting price is $1,000. Estimated value is over $2,000. Then we have a 114, a 1.14 carat oval, fancy yellow, internally flawless diamond. Very beautiful. Looks like it's almost 2 carats. It's flawless. It's gorgeous. It's the right shape. It's beautiful. Starting price is $16,000. Estimated value about $26,000. Then we put up a beautiful pair of yellow diamond earrings. 203 carat fancy light yellow diamond earrings, set in all diamonds. Estimated value is $21,000. Starting price $13,500. It's a steal at that price. One of the most beautiful sets of earrings. Then we've got a 1.34 carat square cut fancy intense yellow diamond. Absolutely beautiful. The video, it's flawless. Everything. Starting price is $23,000. Estimated value is at $42,000. And those are the first 10 pieces that we put up. Again, this is the first attempt at our new auction, so we want to take it step by step. It'll be ongoing. We could keep this auction going for as long as we want to, and we intend on it. We intend to advertise it very heavily, bring to you some of the most beautiful pieces, and as one piece sells, other pieces will take its place. I also want you to know that I invested very, very heavily in these Tiffany silver coins. Back in 2004, I bought 5 of these Tiffany 2-ounce silver coins, and they had a Tiffany glass inlay in them, which I was just intrigued by. They were so beautiful. So I bought the 2004s. I bought 5 of them, one for myself and 4 others for clients that were interested in those type of coins. Do you realize from 2004 to now, that diamond has gone from $300 to $6,000. That's how much these coins have gone up. 2,000% in 13 years. One of the biggest returns I've ever seen on a hard asset. Now I've invested very heavily. I've got some kilo Tiffany coins, and I've got some of the 2-ounce Tiffany coins, and they are amongst the most beautiful coins I have ever seen. Some of those will be coming up for auction very soon. Please continue to go to 8 Siegel Fine Auctions, register for this auction. You're going to be not only intrigued by some of the most beautiful pieces, but this is the type of thing that you just cannot stop looking at, because these pieces are museum quality pieces. We anticipate that all of them will go up in value. All of them are strong investments, and we can also resell them for you down the road using the same auction site. We only make money when our clients make money. We get 10% of the profit when we auction for a client. So, again, if our clients don't do well, we don't do well. But we're putting our money where our mouth is. This site cost me 6 figures to produce. I spent a fortune advertising it. We spent over 6 months loading it just so it'll do what it now does. We're very proud and very pleased, and we will start to get a lot of publicity on this. I know that we've been on Bloomberg and Fox News before, and as we start to have success in our new auction business, I'm sure that they'll be doing editorials on us again. So, Randy, again, very proud of this. We just started, just put it up this week, so I want all of our listeners and our clients to go to 8 Siegel Fine Auctions, do some shopping. There's some great deals in there, some things that you'll really be able to do well with. And again, we only have 1 day left on this Libertad coin. For those that are interested in kilo coins, it's a steal. It's one of the best coins you'll ever invest in. And again, you only have 1 day left on that, where you have over a month left on the Elizabeth Taylor piece.
The website is hsfineauctions.com. The auction is underway. Get started right now. Go register, see the catalog, and get involved in the fun. Bid. Take a look at Elizabeth Taylor's amethyst, pearl, and diamond brooch. History, a museum piece right there that you can bid on. And Harold touched on the Libertad, and that's one that really sort of bothers me, because I wished I would have. That's one of those I wished I would have, for me, invested in that Libertad back when we were offering them back in 2004. They are just so beautiful, and this is my opportunity, your opportunity, to go to hsfineauctions.com and place your bid on that Libertad 2011 Series Silver Kilo coin. It is absolutely gorgeous. Featured Diamond of the Week is a .41 carat, round, brilliant cut, fancy purplish pink argyle. The website, rarecolorediamonds.com, featured Diamond of the Week. And I promised Harold that in the summer months, what we would do is go back and take a look at the auctions of the first 6 months of the year from Christie's, Sotheby's, and really drill down and take a look at the results. We did have the results for you in our free weekly newsletter in the first half of the year, but we never really drilled down with specific lots. But this was one amazing sale that Christie's had not that long ago. Magnificent Jewel Sale, April 26, 2017, New York City, Rockefeller Center. So here we are just a few months ago. And if you go through the results, and we can send them out to you if you'd like to get them, connect with Harold, 1-800-432-1022, rarecolorediamonds.com. We'll be happy to send them out. Lot 331, and this is the top lot in the sale, an exceptional colored diamond and diamond ring, horizontally set with a cut, cornered, rectangular, modified, brilliant cut, fancy, intense pink diamond, weighing approximately 3 carats. And it's flanked by 2 diamonds on the side. The estimate on it, $1.5 million. It went for and I'm rounding off here, 1.9 million. 1.5, 1.9 million. Actually, it was $1,927,500. A very nice increase. Lot 285, a colored diamond and diamond necklace centered upon an old-cut, open-work diamond peg of foliate motif, suspending 3 articulates line of Colette set diamonds, terminating in 2 European brilliant-cut, fancy grayish blue diamonds. Now, this is a diamond necklace that was gorgeous. This is one of those, okay, Harold, sit down. Here we go. Lot 285, the estimate on it, $80,000. It went for $631,500. $80,631,500. That was a major, major winner in this auction. A beautiful colored diamond and diamond necklace. If you'd like to see it, we can send out the results to you. Lot 231, a colored diamond and diamond ring by David Weber. And it was set with a fancy, intense yellow diamond ring weighing approximately 23.56 carats. It was interesting to note in this complete sale, most of the diamonds were yellow. And that's something Harold has educated us on in the past and present. The yellow diamond market is one that you need to keep an eye on and invest in. Those are much coveted diamonds. The estimate, $300,000. It went for $607,500. Also, lot 219, a colored diamond and diamond ring, set with a cut-cornered, rectangular, modified, brilliant cut, fancy yellow diamond, weighing approximately 20 carats. Estimate, $250,000. It went for $367,500. And Harold, there's a little taste of some of the auction results, but in its totality, as I was going through and really drilling down on all the individual lots, this is one of the best auctions I have seen in North America. Usually we see over in Asia, Christie Sotheby's having these auctions where they really outperform. But in New York, on April 26, 2017, a few months back, Rockefeller Center, Christie's had one heck of a sale. They did very, very well.
You bet, Randy. Again, those are unbelievable results. And again, what it shows is that the trend for colored diamonds or hard assets is moving higher. Again, it's not that the estimates were off, it's just a sign of the times. There's not a lot of investments out there that do well. Stocks, again, are extremely risky. 90% of people that trade stocks lose their money. We had a report on that last week, actually, that out of 26,000 stocks, only 80-some-odd stocks were actually profitable. So, again, if that doesn't tell you. So we look to alternative assets. Other assets can give us value, that can give us pleasure. You know, owning a diamond is not only an investment, but it's something that you have pride of ownership. I mean, if it's in jewelry, you're going to want to display that and show that, and we see it all the time. I know with my wife, she can't wait to go out and show off something new that she got. So, again, we can either have the loose diamond as an investment, or we can put it into some beautiful jewelry that can be enjoyed and handed down from generation to generation. You know, the thing about diamonds, it's not a short-term investment. It's not something that you want to hold on to for a few years and then sell it. You're not going to make a lot of money on it. The fact is that the longer you hold them, the more value they have. We brought up many times, you know, Shirley Temple's diamond that went up, you know, from 7,000 to 25 million over a 60-some-odd year period. But again, it stayed within the family. That's the same thing. If you put away diamonds that you're buying in today's dollars and put them away for 30, 40, 50 years, when they are sold or handed down to the kids or grandkids type of thing, they have something of value. You know, the fact is that if we all put away General Motors stock for our kids and grandkids, they would have nothing. Just like, because those companies can go bankrupt. And they did go bankrupt in 2008 until they were bailed out by the U.S. government. So, again, I don't believe in paper assets. I've seen in my 35-year career too many losses in paper assets. We deal in the real thing, the hard asset that you hold in your hand, that you own, that you can wear, that you can enjoy. You know, even these Libertads or Aztec coins or Tiffany coins, to display them in your home will bring you tremendous joy because everybody who sees them will comment on them. So you have that pride of ownership, along with the fact that some of them, not all of them, but some of them, turn out to be unbelievable investments like those Tiffany coins that went up 2,000% over a 13-year period. That is an unbelievable return, and it happens in the hard asset market. And you're going to see a lot of these pieces coming to you on our auction site. We built this so our clients can have fun, so they can own some pieces that are valuable, that are beautiful, that they can really enjoy, and hopefully one day sell or hand down to the family as a keepsake type of thing. So, again, very excited about this, Randy. I think that the items that we're putting up on the auction site are phenomenal. I think the results of the auction that you just shared with us are tremendous, and it gives you an indication that these type of assets can hit a home run. You know, not everyone is going to, but the fact is that you can hit a home run in some of these items, and that's an amazing thing. I remember seeing on television on some of those antique auction shows that people would bring in things and find out that they were worth absolute fortunes, and that's the fun of collecting these type of collectibles. Wasn't there a ring the other couple weeks ago, Randy, that somebody found at for next to nothing and is sold in the tens of thousands of dollars? So that's what these type of hard assets can do for you. Not all of them do it, but a lot of them do.
We want to give people an update. The Argyle people that do the tender, Rio Tinto, they came out with a coin set, and it was snapped up within a month for $1.4 million. And that was announced last week. The anonymous collector snapped up the Australian Trilogy, which included 3 coins, each with a colored diamond, one pink, one purple pink, and one violet, from Rio Tinto's Argyle mine in Western Australia. And you can just see that these coins with the insert of the diamonds, this is the second year they've done it, and they have sold very, very quickly to a collector out of Asia. And this is something that Harold is kicking around the idea of possibly doing as well. It, I think, would be a big, big winner. But one thing I would reiterate is we have about 2 minutes left here. Don't pull a Randy here now. And don't sit back on the Libertad and wish you would have. In 2004, I wished I would have made that investment in the Libertads we were offering at the time. The Libertad 2011 Silver Series Kilo coin is available. As Harold said, here in the next day or so, the auction for that item will be up. So do not delay. Go to hsfineauctions.com. Take a look at the Libertad. Take a look at the Elizabeth Taylor Amethyst Pearl and Diamond Brooch. Obviously, that will go on for some time. But, Harold, with about 30 seconds left, it's an exciting time for hard assets.
You better believe it, Randy. I'm very excited about our future. I'm very excited about the present. Again, we worked very hard on the auction site. It's now here. We're going to continue with it. I think it's going to be very successful. We'll be able to sell our clients' diamonds and bring some amazing items to our clients and listeners that I'm sure they're going to enjoy.
Thank you very much, Harold Siegel, for another outstanding show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Featured Diamond of the Week, a .41 carat round, brilliant cut, fancy purplish pink Argyle from rarecoloreddiamonds.com, featured Diamond of the Week. And yes, you can make money in these markets. Asset allocation is important. Hard assets, a must. Find out more. Connect with Harold Siegel, rarecoloreddiamonds.com, 1-800-432-1022. You can be making money right away with the programs Harold has in place. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.